I believe we're going to see more and more institutions, including companies, and then eventually state actors as well, view the Bitcoin standard as sort of their hurdle rate to say that if I'm going to invest in something else internally in terms of projects, it better beat the rate of return of, say, some fixed supply asset like Bitcoin. This is a form of capital discipline. That's where the future is headed. And I do think it's in the self-interest of the United States and frankly, individual states as well, to be able to realize that before they're just jumping on the train too late.
Vivek Ramaswamy isn't just talking about Bitcoin. He's making a case for why it could reshape the global financial system. With the US drowning in debt and trust in central banks crumbling, is Bitcoin the answer? Vivek lays out his vision for financial freedom, capital discipline, and why institutions, states, and even sovereign nations may have no choice but to adopt the Bitcoin standard. But is he right? Is this the start of a massive economic shift? Drop a comment below. Do you think Bitcoin will play a major role in the future of the US economy? And don't forget to hit that like button and subscribe for more deep dives on the biggest voices shaping finance and politics. Let's get into it.
We got to be skating to where the puck is going, right? Not just from the standpoint of being a Bitcoiner or a financial markets person, but even just from the standpoint of where sovereign nations are necessarily headed, where the US is necessarily headed. We've got a national debt crisis approaching epic proportions in our country, where the interest payments on our national debt are soon going to be the largest line item on our federal budget. They're already bigger than the entire defense budget. We're going to have to think in the future about what that means for tying the hands, or at least providing competition to the Federal Reserve and to central banks and frankly other Western countries as well that have run on hyperdrive for too long. Eventually, people are going to look to those alternatives. Historically, if you look through most of world history, that alternative has existed in the form of gold. But there you have different questions about physical supply, storage. Now we have a new finite supply, and I think that that's really important. Separating low-resolution discussion about crypto broadly versus Bitcoin, a fixed supply asset that is mathematically defined, that frankly, not only individuals, but now corporations, you're beginning to see the rise of Bitcoin treasury companies, other institutions are beginning to understand this is a form of capital discipline. That's where the future is headed. And I do think it's in the self-interest of the United States and frankly, individual states as well, to be able to realize that before they're just jumping on the train too late. In some sense, it's better to jump on late than never, but I do think when you think about fiscal discipline and the role that Bitcoin is going to play, it is an alternative. It is an opt-out. It is something that therefore holds the feet to the fire of central banks, holds the feet to the fire of the US dollar itself in a way that's actually constructive for the US dollar to have that type of competition where you can't turn on the printing machine with Bitcoin in the same way that you can with a fiat currency. But I also think it's an opportunity in the long run when you think about this national debt crisis and our way out in the United States and other governments as well that are facing similar debt crises. Something with fixed supply that has value, a fixed store of value, is actually potentially a path out as well. And so I'm a big believer in financial freedom. I think Bitcoin is a representation of financial freedom born in the aftermath of the '08 crisis and the ignominious bailouts. Now really realizing, I think, the early days of when people understand that the path to the solution, the path to the future is really just going back to the first principles of financial freedom of competition with a fixed supply that can't automatically be turned on like a money printing machine. That I think is going to be something that more and more individuals, more and more companies, other institutions, and even states and sovereigns are going to appreciate and going to have to appreciate over the course of the next 10 years.
One of the things that I know you've talked quite a bit about is there's been like a centralization of power, but there's also been a hollowing out of American manufacturing, of the middle class in the United States. And a lot of that has come from this pursuit of cheap products, cheap labor, globalization, and what I think Bitcoin has probably done that no other technology that I can think of is that it was a bottoms-up story. A lot of the people in the lower socioeconomic classes were able to go ahead and acquire this before the large financial institutions, before the corporations, before the nation states. And so how does that play into now the largest pools of capital playing in an asset where when they start to buy, when they start to participate, it will actually enrich the people not the large institutions, not the large corporations. It's like a very fascinating bottoms-up technology story that is really coming on the heels of a 50-year, plus trend of hollowing out of that middle class.
That will be the case, Pomp, so long as overregulation doesn't get in the way. I mean, historically, a lot of what the financial regulatory, especially at the federal, but also state level apparatus has done is in the name of helping the very people they seek to protect, they actually end up making it far worse off for those very people they are protecting by stopping them from participating in some of the areas that people in higher income strata are able to. So assuming we continue to operate under the caveat that there's not going to be artificial constraints that stop people at every end of the socioeconomic stratum from participating, and I'm optimistic about that. I don't see things headed that way right now. Then yes, I think you're right. This can be actually a unifying force that lifts up Americans of all stripes, of all backgrounds. I also think that beyond just the pie in the sky, vision, I think that very pragmatically, look at the environment that we're in with respect to capital discipline. We're not in a fiscal and even financial markets environment anymore of just turning on the money printing machine and having effectively zero cost money. You saw that for a lot of startups, a lot of stock market got addicted to that zero interest rate environment. That's not where we are right now. So I speak as somebody who, yes, I'm, running for governor of the state of Ohio now. I ran for U.S. president before. I don't think of myself as a politician, though. At my heart, I'm an entrepreneur. I've built businesses. I speak as a former CEO when I say this. That changing environment also changes the hurdle rate for capital investment internally. So I think part of what you're seeing is historically there was no internal hurdle rate. There was no discipline for institutions, nonprofits, for-profit companies to think about, okay, well, if I'm investing in this project internally, it's sort of zero interest free money anyway. I'm not thinking about what the opportunity cost of that capital is. Just take it in and spend. It's a different environment now. We're not going to be in a zero interest rate environment for the foreseeable future. Now businesses have to think about what is their hurdle rate for internal investment. And I do think that the Bitcoin standard has emerged over the course of the last 15 years. It's almost the ripening of Bitcoin and the Bitcoin standard comes at exactly the point in time where more of those institutions are going to need to think in a rigorous way about their hurdle rates as well. And so I think both in the unifying social sense of this, the sense of empowerment, the sense of financial freedom that Bitcoin represents, that's, I think, a positive cultural force and a cultural realization. But it comes at a time where it's not just the soft, touchy-feely stuff, but it is paired with a recognition that we're in an environment of increasing capital scarcity compared to the last couple of decades, certainly the last decade. And against that backdrop, I believe we're going to see more and more institutions, including companies, and then eventually state actors as well, view the Bitcoin standard as sort of their hurdle rate to say that if I'm going to invest in something else internally in terms of projects, it better beat the rate of return of, say, some fixed supply asset like Bitcoin. And so I do think that that's going to become more normalized. We're already seeing the early stages of it and the confluence of that bottom-up need and desire for financial freedom and participation by the everyman, but combined with institutions also becoming more rigorous, I think could really be a new era for Bitcoin ahead. And from where I sit, that's great that it's a new era for Bitcoin, but I see it as a new era of capital discipline and a new era of fiscal and monetary policy discipline for the United States, which is what I'm in this for. I believe that's a good thing for our country as well.